Aloha and welcome to Java on a very special Sunday. This is June 16th, 2024. We are also celebrating Father's Day, so I would like to say Happy Father's Day to all of you out there that are dads. You're doing the most important job in the world, so thank you for that. And also, I would like to honor my father, who I miss terribly. He spent the bulk of his life fighting for the very freedoms that we can enjoy these days. And I will see you again someday. So, with that, let's go into our markets. We've got the MMRI risk indicator hovering at the same level relatively. It's pulled back a bit, but nothing major. So, we've got a relative calm in the markets at the moment. Fear and greed index have moved deeper into the fear territory. And as I said on Friday, as it moves deeper towards this fear area, it can move much more rapidly, tends to, because fear is a stronger emotion that moves the market than the other emotion that moves it is greed. So with this, we've got also an agreement, as I was speaking about this before, we've got another expert coming out saying stock market volatility may be due for a significant move higher. So that's the general consensus with a lot of the professionals. Now, that's not the stock market necessarily, although I believe that will go higher, and I'll say why in a moment. But that's volatility. So we'll have large moves with increased volume and watch a lot of flows. So right now the sentiment is mixed, kind of on a roller coaster is what we're expecting moving forward. It's got a few imbalances and also some bloated sectors, namely with the tech sector at the moment. So we're going to watch a rotation going out of this. So we've got the Dow pulled back a bit, with the Nasdaq marked another closing record high for tech, and its streak of 4 consecutive record closes lower. So we are watching this initial change. We've got a big week coming ahead. So what are we going to be watching? Bank of Japan holding their rates. They're also looking at basically tapering their balance sheet. So, not a major move from them yet. We're keeping an eye on them. They do hold a large amount of United States debt. So, we've got US import prices also unexpectedly decline. So, we're watching a move into deflation. And these producer prices are saying disinflation is in the pipeline, which is good to retrace as long as it doesn't move too rapidly. If it moves too rapidly or deeply, that puts it into a recession or depression. So this week we're watching the US will be shorter because they've got a Juneteenth holiday on Wednesday for the markets. So key economic indicators that we're watching are retail sales coming out. There's also manufacturing services PMI, watching housing starts and building permits and home sales. Those will give us an insight into what we can look forward to as far as construction sector. Now, that's very important for what we're going to see as perceived wealth in a little bit. So with this, we're also watching a few Fed officials will come out afterwards. If any of these numbers are skewed or terribly off from the mark, they're going to manage the markets with what they say. So don't worry about what this is going. We've also got the plunge protection team in full force, and they've also got basically circuit breakers for the markets. If they move too much, they will shut them off, halt trading for a bit, and that could possibly start coming into place. Don't be shocked. We've also had some exchanges slow down or have issues with the new systems they've got in the background. Now, I can speak more about that, but I'm going to stay very light. We've got a lot to cover. So, with the real sentiment, we've got a divergence. We've got what is perceived wealth, the stock market record high, and really that is another indicator in my mind of inflation, because as the dollar is losing value, money's going places where it's looking to be a safe haven and also possibly increase. And with that, as the dollar drops in value, you see everything else go up in price. So we're watching a bit of that happen now. In the real world, so to speak, real economy, we've got 1.2 million more Americans falling into subprime credit category. So This is driving the sentiment low. US consumer sentiment is a 7-month low. They don't have the money to spend. They're not getting the credit now, and they're not allowed to increase their credit. In fact, it's being taken away from them. So banks don't make money unless they're lending out and they're making this interest. So what I was speaking about the other day, as far as the Federal Reserve cutting rates, they cut the federal funds rate. And what we're going to watch is, if we don't get these numbers in housing up, if we don't get the loan rates up, they're going to drop loan rates, mortgage loan rates, and loans across the board in order to get consumers borrowing and spending. Otherwise, they're going to have no business. So this is part of what I was saying. We're going to watch this divergence continue. So as this happens, we've got two types of wealth. The first is the perceived wealth. So as people see the stock market going up, they're watching these numbers coming in. This is all a perceived wealth. They're watching housing going up. They feel rich. Their 401ks are going up. And then also, if they think their value of their house is going up, that's not real wealth. The GDP, what is actually being produced, and I don't mean the war production, but I mean what is actually being manufactured and created, is real wealth, and that is in significant decline. So this balance, will have to work it out. And as it does, we're going to see much more recessionary. If we're lucky, stagflation is where it will stop at and grind out for a while. So going to be readjusting either way. So we've got those PMIs coming out and the numbers. Let's take a look at our calendar. We've got core retail sales, not too much on Monday. So we're getting Tuesday, then Wednesday will be the holiday. Thursday, we're looking at jobless numbers. So that's going to have an effect for the Fed. And with that, we could watch the stock market move a bit. And then more numbers on Friday. For earnings, we don't have too much coming out. Lennar is a homes. They build homes. Basically, we'll be watching them for that, CarMax and the likes. So going forward, we've got currency and reserves that we're looking at. The dollar appreciation are basically in dollar reserves. Now, what does this tell us? This tells us what other banks in the world are holding as far as dollars in order to buy our goods. So the United States is still kind of insisting that everyone trade in dollars. So if you want to purchase US goods, they have to hold US dollars. However, US is not producing very much, and a lot of the companies, as we've seen, are moving out either to Thailand, Taiwan, India, Mexico, or South America. So with all of this going on, there's less production, so there will be less need for foreign countries to hold the dollar. So with this, we've got the IMF data revealing an increased preference for non-US dollar reserve currencies. So if they're purchasing now goods in other countries' currencies, namely in either yuan, the ruble, or also some other less popular currencies. So along with this, we've also got euro reserve currency status threatened, because the euro is dropping along with the dollar. These Western currencies are being edged out. The mainstream media is talking about how this is not happening. Dollar will maintain, and I do believe the dollar will maintain for a while. But we need to watch this, because this is the beginning of the shift. So with this, we've got Russia overtook the United States as a gas supplier to Europe in May. So Europe purchasing gas from Russia, they're doing it in the ruble now. In the ruble or the yuan, or they have to do it in a different currency, because Russia is not taking US dollar. So with Russia, they are also trading exchanges with Iran, who is up in their energy powerhouse, 48% in the first quarter. So this is coming from Russian Federation Alexander Novak, saying the volume of trade has increased tremendously. We've got trade up between Tehran and Doha. So Qatar and Tehran now up 41% in 2 2 months. With this, we've got this cut is from mainstream media. So they're saying the end of dollar dominance, and analyst addressing rumors Saudi Arabia will replace the dollar with the Chinese yuan. So they're debunking a myth of a petrodollar pact forcing Saudi oil to be priced in US dollars. So it's true that is a myth in the fact that they're not being forced, but they are choosing to. So they are moving out of this into the Chinese yuan, and I'll go into that in a bit. So right now, they can still trade the petrodollar, they can still trade with US in US reserve currencies at the moment. However, they are moving more into either the yuan or the ruble. So we've got the Chinese yuan is replacing the US dollar as Russia's main foreign currency. Central bank, this is the Russian central bank. So if they're insisting more direct trade through BRICS, and they're basically being forced by China. China is the currency magnate for that sector right now. India is the other one, but their currency is weak. So it's China's yuan is really kind of directing the way with the ruble right behind it. So as they adopt a cryptocurrency, and we'll go into that in a moment, this is going to shift very rapidly. So right now, the renminbi, which is another name for the yuan, is accounting for 54% of the foreign exchange market in May, and this is according to the Russian central bank. So I've got a couple of things I want to bring up. So we've got Visa speeding to aid disaster victims with a new government payments app. So this basically, they're moving to a CBDC, and they always use the lower end or donations, or they use the cover of these new disaster victims, however they want to put it. They make it sound good. So they're putting in place these payment plans. Visa is new and going on to the CBDC. We had a new announcement from Ripple CEO announcing collaborations with over 10 governments on their central bank digital currencies. So there was a lot of basically drama going on behind this with Ripple in the United States and the court. So still in the air as to which direction this could go. There's a couple of other cryptos that could be involved with this, namely Chainlink. We've got Solana. We've got also Stellar is another one, and different platforms. Going to speak about this later, probably in a separate one, because I don't want to go into that here. But what I do want to bring up, and I think this is very important, and I've been sounding the alarms on Sam Altman for a long time. He is the head of OpenAI. So first they were talking about all basically nonprofit. Now they've got the former NSA director is on their board. So Sam Altman started the WorldCoin. He's got OpenAI. They've partnered with Microsoft, and now they've got an NSA director on their board. They're doing everything they can to get part of your information on their platform. So please don't use ChatGPT if you can avoid that. It's also backed OpenAI and Microsoft. I can't stress this enough. Anyway, that's the direction it's going to head. So with this, until I see you again, we've got a lot of other things going on. I will talk more about the cryptocurrencies, probably in a separate one, because there's quite a bit more to go over. So until I see you again, my friends, stay free.